Welcome back to the show, everybody. We got a great one lined up for you today. Crypto adoption rate is staggering, according to Chainalysis, and 11 million XRP has been stolen along with other cryptos. We'll tell you from where. XDC, $19 trillion market. We'll get into that. And Coinbase in Japan, Ripple backs an exchange in the Philippines, regardless of what's going on with the SEC lawsuit. Diem launching a digital wallet. I tell you, there's so much going on here. Somebody roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at BackUpBradleyAbove, and everything that we're talking about here today. $1.897 trillion market cap for cryptocurrency. We're seeing some more money bleed out of the space this morning. We'll keep an eye on XRP price, which is at $1.10 right now. Low range 107 to upper range at 119. Let's get into the news. There's quite a bit of it this morning. The world is adopting crypto at a very fast pace, 880% more than last year, according to Chainalysis. Not a YouTuber or a podcaster. This is Chainalysis. Damn, that's a big number. 880% more than last year. Holy moly. Now, this is a big number, too. 11 million XRP stolen by hackers from Liquid Exchange, along with other crypto worth $80 million. And I hope they get it back. That is a mess. Liquid Exchange out of Japan, I believe that is. London School of Economics joins Hedera Hashgraph as a council member. Now, HBAR is something I've been watching for a long time. And full disclosure, I just recently got into it. I have a small position in that, but I do like it, and it's not financial advice. But I'm happy to see them join with like the London School of Economics, and it'll be interesting to watch Hedera Hashgraph grow. Looking right here, Coinbase is launching in Japan with Ripple partner Mitsubishi UFJ. The exchange said it initially support trading for the 5 largest crypto assets by trading volume, with more assets to come in the coming months. Japan loves XRP. You know, I'm reminded of this moment right here where Brooks Entwistle from Ripple made the comment recently in a recent, I think it was a Ripple Insights or a Ripple Drop, where he talked about placing yourself in front of growth. You know, and that's exactly what Coinbase is doing here, right? They know how big crypto is in Japan, the APAC region, and they are placing themselves in front of growth. That is amazing. Looking right here, this is amazing too. Philippines cryptocurrency exchange startup gets $12.5 million in funding, and guess who's a part of it? It says here, Hong Kong-based digital asset operator BC Group and Philippine Digital Bank. Union Bank's venture arm UBX also joined the round. Existing investors and BNext Ventures and CMT Digital and Ripple Labs also participated in the digital asset exchange PDAX. This is like, excuse me, I don't even know what to make of this right here. This is Andre Casterman. I want you to look at the size of this market that he's talking about for XDC. Again, not financial advice here, but I am a holder of XDC, and I couldn't be more excited about his comments and what's going on with XDC. And if you look here, this guy has an amazing background, obviously managing director of his own consulting firm, it looks like here, chief marketing officer, as he helped all these different clients. He's been in the banking, crypto, blockchain sector for a long time. This guy is no stranger to where we are. And you can see freelance with Zenfin. You know, he's done a lot of stuff. Well, Zenfin has put this out. Zenfin XDC Network selected as the first blockchain company to join the Global Trade Finance Distribution. In it. Right? So it says ABN, AMRO, it says Santander Asset Manager, Ing Bank, SMBC, ANZ, Commonwealth Bank of Australia, Texel Group, NN Investment. And I tell you, this is really exciting. Listen to what Andre, I think it's Casterman, says here. It says $19 trillion. Let that sink in. His comment here is, XDC Network joins the Global TFD Initiative, a consortium of trade originators, credit insurers, and institutional funders. We welcome Zenfin's XDC network to the TFD initiative, as this enables us to bridge the 19 trillion US dollar trade finance asset class. Holy moly. That is big right there, ladies and gentlemen. Oh my goodness. Again, not financial advice, but full disclosure, I do hold XDC. Now, this is Facebook Diem, and they say that they are set to deliver a cryptocurrency-tied digital wallet regardless of the confusion that's going on in Congress right now and with market regulators, to be honest. So let's drill down on this for a second here because it's worth it. It says Facebook is ready to set to market a digital wallet tied to the company's own Diem cryptocurrency. Side note, which Kristen Catalini from Diem had told us months ago that the Diem token would be a placeholder token, stablecoin for the digital dollar once it was released by the United States. It says here it would allow the customers and consumers on Facebook to make online payments without transaction fees. David Marcus, the head of social media giant's financial services unit, revealed the news Wednesday, August 18th in a memo published on Medium.com. Marcus contended that Facebook's digital wallet, Novi, could repair the broken payment infrastructure that now exists in the United States. This is not small, ladies and gentlemen. Novi is ready to come to market, he wrote. It's regulated, and we're confident in our operational ability to exceed the high standards of compliance that will be demanded of us. It says company processed $100 billion in digital payments in the past year. Now, let's take a look at this. According to Marcus from Facebook, completed $100 billion in online payments over the past year through conventional means, but the company is looking to expand its digital payment services while the digital wallet would be free to consumers. How about that one? The company would later monetize after they get you hooked to it, right? And then profit from it through merchant services. We trust that people will prefer a service that is cost-free and more convenient to ones that are significantly more expensive and not consumer-centric. And he's absolutely right. Plan still requires regulatory approval. While Novi has license or approvals in most U.S. states, Facebook plans to tie to the company's Diem stablecoin would still require regulatory acceptance. So there's still a hurdle in front of them. The memo pushed regulators to accept Facebook's plan to use Novi in conjunction with Diem and regular or fiat currencies such as dollars and euros. Marcus argued that Facebook's system could offer greater consumer protection, better reduce money laundering and terrorism or terrorist financing risk, and move money around the world faster than banks currently do. Now look at the impact of this. There's 2.5 or 2.7 billion users, if not 3 billion users at this point on Facebook. How long do you think it takes to normalize the masses when you release something like this? And you tell them it's no fee to you. Maybe a month, 6 months tops. People will get accustomed to digital dollars and cryptocurrencies in a flash when you tell them there's no fee. He said here they could profit only by offering domestic and cross-border online payments using fiat money, and the company might do that, but Facebook does not want to miss its shot at creating an open, interoperable protocol for money on the internet and truly change the game for people and businesses around the world. It says stablecoins are still drawing concerns, and if you haven't seen the video from this morning, the Fed is looking at potential threats of stablecoins, which is a problem, but I think they're going to sort all that out, obviously. But it says here stablecoins have run into regulatory roadblocks due to concerns that the lack of sufficient cash reserves. Facebook opted to use Diem as its stablecoin after a more ambitious plan to use its larger scale Libra stablecoin drew resistance from U.S. Congress and other leaders around the world, by the way. Diem is operated by a nonprofit group of the same name, which Marcus serves as a director. The association is seeking necessary regulatory approvals, but stablecoins alone, he said, can't solve online payment problems. A cryptocurrency needs to be combined with an underlying payment network that's cheaper, faster, safer, interoperable, and programmable, and well-designed stablecoin, one that always holds one-to-one reserves in cash at U.S. banks and very short-term U.S. Treasury bills. And I think you're seeing I think when you see this, you're starting to see what that conversation has been like between Diem and regulators. We've seen regulators and legislators hint at the idea that if we're going to have stable coins, the reserves need to be held in a federally chartered bank, FDIC insured, where they can make sure that the reserves are in fact there. And there is a 1-to-1 or a surplus, right? It says here, arguably offers a better consumer protection than fiat balance held in any wallet available in the U.S. right now, he wrote. He said the rollout will be a long journey, and he goes on to say that Facebook is always attempting to bolster its own image, which has been tarnished in privacy violations, that's for sure. And it goes on to talk about through the Federal Commission. It says this proposal would be so great if only Facebook wasn't involved, but he noted people and businesses in 160 countries have used its platform to make payments with 55 different currencies, so the company deserves a fair shot. There's no question about that. So there you have that, and it makes me feel like if they're ready to roll this digital wallet out and they're having this talk with regulators and knowing that they're at like a final hurdle or two, we might not be far from seeing the US digital dollar, however far away it may look to us right now. Let's take a look at this really quickly, because I wanted to highlight this about the U.S. infrastructure bill, because it won't be too long from now that they'll be getting back to work on this at the House and maybe even back at the Senate. So let's take a look here. This is Jake Travinsky really breaking it down. And it's just a small piece here that I want to give us to really get the clarity we need here on who this could affect if the language is not correct. In theory, miners would have to put a 1099 form for any user for whom they included a transaction in a block. Potentially, liquidity providers and decentralized exchange protocols could be captured by this requirement and have to KYC all of the users of the DEX protocol, or DeFi interface providers, which includes most of the major DeFi developers and also aggregators, in theory, could be captured by this. The lawyer says the popular non-fungible token, the NFT space, could be impacted as well. Listen to this. Something we haven't even started to discuss publicly, I think, is how it impacts NFTs. You can imagine an NFT marketplace being captured by this. Even in theory, content creators themselves could be turned into brokers under the tax code. And of course, there's fundamentally no way for these persons to comply with the IRS reporting requirements that are usually imposed on centralized custodial intermediaries. Okay, obviously it's clear from the language why that's got to be corrected, right? I don't think it needs explanation there. What I want to remind people is that crypto has been put inside of the U.S. infrastructure bill, meaning to me that cryptocurrencies being recognized as new payment protocols, the ones that work at least. And if that's the case, because the infrastructure bill deals with what? Infrastructure, schools, roads, bridges, those kinds of things, right? And also because crypto is in that bill, new payment protocol methods. Legitimizing these new payment protocol methods by having them in beside the rest of the infrastructure bill. That to me tells me, however off kilter this may be with the language about definition of broker, I believe ultimately they get this right, because they are acknowledging that cryptocurrencies are new payment protocols, and they're going to have to get it right, because it is going to become a part of the new infrastructure, not just in the US, but around the world. That's going to do it for me. Make sure you hit the like and subscribe, leave a comment below, share with somebody you know. I Trust Capital, ladies and gentlemen. Pure VPN, help hide your anonymity online. You can even look at Unstoppable Domains if you're looking for a domain. I've got so many great things. Ledger Nano, and they're vetted, trusted links. They're very safe to click on. They're products and services that I use each and every day if you're interested. That's going to do it for me. I'll catch all of you on the next one.